Welcome to the first luxury market report for Calgary in 2025. We're going to dive into stats, numbers all around Calgary, Canmore, the rural areas, and in this video today, we're actually going to dive deep into the slowest and the fastest moving neighborhoods, and we're also going to talk about off-market data. We're going to look at what the market is doing, what we could expect in 2025. Well, let's jump into the numbers. So as you can see in the stats, these are some of the big numbers that we have here. We're tracking lots of different areas all along the bottom here, but we only talk about a handful of them because some of them only have like 4 active listings and 1 sale in a month. So it doesn't make sense for us to take time to dive into that. But we're going to talk about Calgary, Canmore. I'll mention Chestermere today, and then we're going to talk about the rural areas around the city. So in Calgary, we ended up having 355 active properties when I pulled this data on January 1st. And we had 99 sales in December. Canmore, they had 14 sales and 76 actives. Chestermere, which we forgot last month, but it's in here now, they only had 2 sales, but 25 actives. There's a little bit of a foreshadow there for you. And rural foothills, they had 39 actives and 8 sales, and Rocky View had 69 actives and 14 sales in December. Now, if we look at what the months of inventory are doing, you got to remember anything between 2.5 and 4 is a balanced market. For rural areas, it can be higher, but you can clearly see one that's standing out of the rest, and it's 13.5 months of inventory, and that is Chestermere. Chestermere has 13.5 months of inventory. So if it's mid-January right now, and we were to say, how long is it going to take for everything to sell at the current pace of all the stuff that's on the market in Chestermere right now? Well, everything over $1 million is going to take until middle of February, early March 2026. Sweet. So that's Chestermere. Cochrane is sitting at 7 months of inventory. And then we have a handful of that are sitting at high 5s. 5.7 in Canmore. Both of the rural areas, Foothills and Rocky View, are sitting at 5.1 and 5.4. Calgary is actually sitting at 3.8, and we got Airdrie at 4 and Prentice Greens at 3. So the reason some of these don't have any is because they didn't have any sales last month, so you can't really calculate the data. But moving on, when we look at what is costing the most, well, most likely Prentice says $2 million for the median sale price. But I'm guessing there might have been only 1 sale and it was that price. So it kind of skewing stats. And again, when we're pulling such little stats, it really messes with it. But Calgary's is sitting at 1.28. Canmore for the last month was sitting at 1.29. And Chestermere was at 1.1. Cochrane is 1.1, 1.2 for Airdrie, and the rural areas were about 1.5 and 1.48. So as good as it is to understand the median sale price, it's also really important to understand what the price per square footage is, because that's going to help you determine a little bit more about what areas are more expensive versus others. So as you can see, Canmore, not surprisingly, has 971 square foot or dollars per square foot in December. Chestermere had 780, Foothills had 742, and then it was Rocky View at 606 and Calgary at 584. And so if you're planning on buying a property in Canmore and you're spending similar prices in Calgary, you just have to know you're going to get a lot less square footage. That's just kind of how the numbers work, and it's how it's been for a long time. But here are all the numbers for December. I'm going to pause the video. If you want to watch these, I'm going to keep on going because we're going to dive into some of the cities right now and some of the areas. So in Calgary, we had 99 sales in December 2024. If you look last year, we only had 56. So we've almost had double the amount of sales in the same month year over year, which is quite shocking actually. And if you look at rough prices, we were probably sitting at, it was like mid 1.2s to 1.28. And so prices have also increased in all homes for the median sale price over $1 million. And this trend line here is still showing the increase of sales over $1 million in Calgary. This market is growing and growing, and it's probably not going to slow down, which is exactly why we are talking about it in all of these videos. This last month, there was a large home around, I think it was about 9,000 square feet, 9,500 square feet up in Aspen Woods that sold for about, I think it was 7.5 million, I believe. And so that's going to definitely skew some stats, but it's showing an outlier for sure. The other outliers that were selling probably looks like 3.5 up to 5 million was Aspen, Lake Bonavista, and Bel Air. And so these were some of the high-end stuff, that properties that were selling. Anything here is 2,500 and 5,000 square feet. So you can clearly see, I mean, these two are easily making the rest of them look much smaller and tighter. But this is kind of what's happening for neighborhoods in Calgary. Now, we are going to talk about some of the slowest and fastest neighborhoods right after this, so don't go anywhere. But the 30 days, months of inventory broken down in price ranges. I find this fascinating because it kind of gives you a little bit of understanding what price ranges are doing. So up until right here, up from 1 million to 1.4, basically everything is sitting in a balanced market, right? Maybe a little bit into the sellers, just over $1 million there. As soon as you break that 1.4 number, it's jumped to a 6.5 month inventory. And then 1.6 for whatever reason has dropped down, and then it jumps up to 8. And then we have some tighter markets again once you get to 1.9 all the way up to 3 million. And the reason is you just end up having more sales that are happening here. So there was 9 sales this last month between $2 and $2.5 million, and there's 34 actives. So that would give us a 3.7 month of inventory. And then when you start seeing higher numbers, really it's just coming down to less sales. I mean, when we get up in these price ranges, there are going to be less sales. So in your $3 million range, there's 10 active properties in the city right now, but only 1 sold last month, which gives you 10 months of inventory. When you break it down based on the property styles, last month in November for apartments, we saw 6.57. This month December, we saw 6. When you look at townhouses, we saw 2.6, and then we saw 7. So there's a big difference in these because there's going to be a lot less product of townhomes and apartments that are over $1 million in the city. When you get to semis and detached, that's when you're going to start seeing the numbers a little bit more secure, right? So when you look at the semis, we ended up having 4.47 months of inventory last month, and then we had 3.69 this month. So there was more sales for semi-detached properties in December than there was in November. And for detached properties, it was pretty much the same, 3.6 and 3.65. So let's look at Canmore. What happened in Canmore? Well, we had 14 sales that happened last month, and that's only 1 more than year over year. Canmore is, again, like I said in the last luxury video, it is much more of a stable market because it's had higher priced products for a lot longer. And so we're not expecting this to just be jumping like Calgary because it is a higher priced area already. And so one of the places that stood out was I think it was a detached home in town center that was just under 3,000 square feet that sold for right around 2.7. And then you have a couple other outliers that were around 1.7, 1.8, 1.9, something like that in South Canmore and Hospital Hill. And then everything else was tucked away up to 1.5, probably 1.1 to 1.5 was all the other sales that happened there. And so if you look at the actual breakdown of months of inventory based on price ranges, you can see that 1.4 to 1.5 is in a 5 months of inventory. So it is a lot slower, but anything under or up to 1.4, they're actually in 1 month of inventory range. So things are moving really, really quickly, or there's just a lot less inventory in Canmore for those price ranges. And then above that, you just don't have a lot of sales, don't have a lot of listings, other than properties that are between 2 million and 3 million, because you've got 13 and 11 places and only 1 sale in that price range there. But if you look at the breakdown of detached semis, rows, apartments, you can see that the market got tighter for detached properties from 5.57 down to 4.43. So the market actually sped up and it got a little bit tighter for those detached properties. So now let's take a look at Rocky View County. Rocky View County, like Canmore, also had 14 sales in December. Last year, this time they had 17. So we actually had less sales in the Rocky View County area, and this is all rural properties. So in the neighborhoods, again, it's a little bit hard to understand and say, here's the neighborhoods, because not all rural areas have neighborhoods, but Elbow Valley, so you can see here's the 2 million mark and 3,000 square feet. So all of these places, Elbow Valley, Bears Paw, a whole bunch of places like that, sold over $2 million, but a lot of the places were selling under $2 million over the last month. And so you can see the price per acres. So this is something we look at a little bit differently here, but you can see this would roughly be the 5-acre line. It's a little bit crooked, but most of the places that are selling are below 5 acres. You definitely had like a 48, 47 acre place, a couple 10s, and then a 5, and then the rest are like 2 or 3 acre type parcels that have sold. So if you're looking for 2 to 3 acreage, 5 acre parcel, Rocky View County is a great place to consider. Then you can also see the breakdown of months of inventory. So between really up to 1.4 for the most part, it is in a balanced or a seller's market, except for this one range of 1.1 to 1.2. And it really probably was just because of, only, again, small numbers, 1 sale and 6 properties for sale. But what's surprising to me when I look at this, and it's not totally surprising, but between $2 to $2.5 million, we actually have 10 active places and 4 sales over the last month. So that's quite interesting because that one price range had the most number of sales compared to any other ones. And so in basically between $2 to $2.5 million in Rocky View County, you end up having a seller's market at that right now. I mean, it could change, and it could change quickly within a month because of small numbers, but that's what it looks like. Now, if we look at Foothills County, it had a few less sales, 8 sales this last month compared to 6 last year. And so we're still, the trend line really is kind of flat, similar to Rocky View County. You end up having, the price per acres. I find there's bigger acreages out here because this is the 20 line, and so 10 is here, 5 is here. So you really have only a handful that are less than 5. So if you're looking for a larger acreage, Foothills is going to be the better of the 2 areas in terms of counties and what they offer in terms of sizes. Now, when it comes to price points, a handful of sales that happened, but you're going to see pretty much, this is your 2.5. So everything is in a seller's market that has sales. This one here, right here at 6 properties for sale in between 2.5 and 3 million, there are no sales. So if there was 1 sale there, you would have definitely start seeing some 6 months of inventory or whatever. But again, at this point, what is selling quickly. Stuff that isn't, it isn't. So I want to dive into a handful of the communities that are fast moving, slow moving, and what's kind of, skewing the stats with more off market than sales in certain neighborhoods in Calgary. I've got 5 neighborhoods for the slowest moving neighborhoods that are all over 6 months of inventory or greater. So we're starting out with Winston Heights. It has 6 months of inventory right now, where there is 5 actives and only 1 sale, mainly detached properties. And the median sale price was $1.7 million there, and at $431 per square foot was the median sale price. And then we have Hamptons. So Hamptons had 6 months of inventory, also 5 actives, 1 sales, mainly detached, and you can get into there for around $1.19 million for the median sale price at $490 per square feet. And then third on our list is Spruce Cliff. So Spruce Cliff is in the southwest, and it has 7 months of inventory for the neighborhood for all the properties over $1 million. It has 6 actives, only 1 sale, and there were 6 detached and 4 semis. So it's a mix of detached and semi-detached properties in that neighborhood, and they have $1.1 million for their median sale price at $444 per square foot. Now, Banff Trail has also 7 months of inventory. And this is where you're going to start seeing a mix of these semis and detached as well, because they had 7 actives and only 1 sale, and that sale was at $1.27 million. Median sale price for last month at $516 per square foot. So this is the most expensive on the list so far. And North Glenmore Park, it has 10 months of inventory. North Glenmore Park. For homes over $1 million, it has 10 months of inventory. If you haven't been to North Glenmore Park, it is a beautiful neighborhood, actually. It is right beside Altador, tucked in between the reservoir. Yeah, really, really great neighborhood. They had 10 actives and 1 sale over the last month, with 12 detached homes and 5 semi-detached. So this is including like off-market, everything, just the breakdown of how many types of properties. So they mainly have detached homes in there, but there's a lot of infills that are going in. And that median sale price for North Glenmore was $1.66 million at $748 per square foot. So let's take a look at the fastest moving. So if you have a home over $1 million and you're considering putting it on the market in the next month or two, then you will want to listen to this, because here are 6 neighborhoods that are the quickest moving neighborhoods, all under 1 month of inventory right now. So starting with Auburn Bay down in the southeast, we have 0.67 months of inventory, where they had 2 actives and 3 sales. So they have more sales than they have actives on the market. And the median sale price was $1,008,000, so $1.08 million. I guess it's $1,080,000, $1.08 million for the median sale price at $405 per square foot. Now, Cranston is the next on this list at 0.5 months of inventory, so half a month. So they ended up having 1 active and 2 sales over $1 million, and they are all detached properties, just like Auburn Bay. And they're at $1.36 million for their median sale price at $477 per square foot. Now, third on our list is Douglasdale or Douglas Glen. They're also at 0.5 months of inventory. They have detached properties in that area. They're sitting at $1.1 million for the median sale price, and they are sitting at $390 per square foot. So you can see for these 3 areas specifically, they're all in the south, in the southeast actually, and their price per square foot is a lot less than what we were seeing in some of the inner city areas, which makes sense. So you're getting a lot more home for less price. So let's move inner city and let's talk about Mayfair. Now, Mayfair is one of the most established executive type neighborhoods in the city. There's a handful of them, and Mayfair is one of them. Last month, they were sitting at 0.5 months of inventory, where they had 1 active and 2 sales, again, all detached properties, and the median sale price was $2 million, where their price per square foot was $612. So very, very different than the first 3 on this list. Now we're gonna jump up to the northwest, where Rocky Ridge is. And Rocky Ridge has also a 0.5 months of inventory, where they ended up having an active and a pending property and 4 sales over the last month. A lot of sales, actually. I'm really, really surprised by this. But they're all detached properties, and they're all sitting at $1.55 million for the median sale price at $483 per square foot. So when you compare, let's say, Rocky Ridge to Mayfair, you go from $612 per square foot in Mayfair down a lot to $483 per square foot in Rocky Ridge. So if you're spending, let's say, $1.5 million, $2 million on a property, you're gonna get way more house in Rocky Ridge than you are in Mayfair. Now, talking about price per square foot, this one is the most expensive on this list, and it is also moving the fastest right now, and that is Kelvin Grove. Kelvin Grove had a 0.33 months of inventory for the last month, with 1 active, 3 sales, detached properties. $1.95 million was the median sale price at $722 per square foot. So if you are a seller, you're planning on making a move in the next month or two, and you have homes in any of these areas, you still have to position your property correctly. So let us know if we can help in any way in how we market properties and how we get them on the market and get them sold for you. Because knowing what your sale price is one thing, but knowing that you're gonna get that price, that's another thing. And that's where we come in and we can help you with that. However, I also want want to talk about off-market listings. If you watched our market video a couple weeks ago, we ended up having a huge conversation on there about off-market listings. And I want to talk about a handful of neighborhoods that have way more homes that are coming off the market compared to what is actually selling. What does that mean? Is this a trend? Are we gonna see some things that are kind of skewed in the next couple months? I'm not sure, but here's what the numbers look like. The first one I wanna talk about is West Hillhurst, where we saw 350% of homes going off the market compared to those that sold. So what does that mean? We only had 2 sales in West Hillhurst in December, and we had 7 homes that went off the market. Now, I do want to say this is December. So these are all the homes that could have taken their homes off the market prior to Christmas, and they're planning on going back on. I don't know. But I'm gonna also share with you the average year built, because there's I think a little bit of a trend here. So for West Hillhurst, this 2 sales was $1.2 million as their median sale price at $877 per square feet. The average year built of the off-market homes was actually 1993. So these are more established homes. 7 of those homes, the average year built was 1993. Now, second on our list out of 4 neighborhoods is Shaganapie. So Shaganapie has 500%. 500%. I mean, there's only 1 sale, but there was 5 that went off the market. There's only 1 active in there as well. So the median sale price was $1.29 million at $531 per square feet, and the average year built off market was 1990. So again, we're having more established older properties that are coming off the market, all over $1 million. It's not these new builds like you're gonna see in the next neighborhood. And that next neighborhood has a much newer average year build of the off-market homes. I'm talking about Spruce Cliff. Spruce Cliff is very close to Shaganapie, but there's a lot more new builds happening in there. They had 500% of their off-market with a 4 months of inventory in that neighborhood. They had 5 off-market homes and only 1 sale in December, whereas $1.17 million of the median sale price and $444 per square foot. Their average year built was 2023, where there was 6 detached and 4 semi-detached properties in that area when you kind of add up all the off-market and sales and actives. So there are newer properties that are coming off the market, and a lot of times they're just potentially overpriced. Builders trying to hold and just wait on a property. I mean, if you got that many new build properties coming off in one neighborhood over $1 million, it kind of says something. And prices aren't there for those builders in those areas, and they need probably a better strategy when it comes to actually marketing and selling these properties, as well as proper advice on pricing. So if that's you and you're watching, let us know. We can help you out. But the 4th neighborhood that has the most number of off-market compared to those that sold is North Glenmore Park. We already talked about North Glenmore Park because it has also the most months of inventory. So this is literally the slowest neighborhood in Calgary for homes over $1 million, and it also has 600% of the homes that sold went off market. So there was 6 off markets, there's only 1 sale. And again, $1.6 million, $748 per square foot. But the average year built of the off market was 2013. However, even though the average year built was 2013, 4 of these were actually built in the last 3 years and 1 from 1976. So part of North Glenmore Park's problem could be that we are seeing, again, more new builds that are hoping and asking for a lot more money than what the market's willing to give them. So overall, for all of these off-market listings, in these 4 areas, in December, there was 23 places that went off the market in these 4 neighborhoods. 11 of them were built after 2021. And of these 11, 36% of them had legal suites. So if you want to learn more about the increased number of luxury homes with suites in Calgary, well then head up to this video here and we'll see you there.